Hello, everyone. A pleasure to have you here. It's great to continue with this. And I think actually your topic before is particularly interesting for me because I've been working a lot in Africa and I'm actually working as we speak. So I think for this panel, and I think probably I would like to, we're going to be talking about fundraising and investment trends in tech in 2020, which is actually very relevant for what you were talking before. And I would highlight as well some of the areas that you mentioned as from an entrepreneur perspective, but as well how to deal with the uncertainty of COVID-19 and post-pandemic world, which is kind of a new world in a lot of ways, but as well look at financial concerns and recession, how to look at these happenings to reboot and look at better investment opportunities. And I think there's a lot of opportunities as well, especially in the relationship between grants, investment, and other opportunities. And as well, how to look at geopolitics and the investment ecosystem. I think that's particularly important. That's what I would like to talk. So on this panel, we have, I'll try to spell correctly the names of everyone. So RAZIF ABDUL Aziz, Acting Group CEO of Cradle. And then we have William Hui, Director of CreditEase Financial Innovation Fund. And as well, Aniko Szigetvari, Founding Partner of Atlantica Ventures. Is everyone on the call?
Yeah, hi everyone.
Okay, so what I would like to suggest, if everyone could introduce yourselves, I think it's important. So I was already introduced and you can find a lot about me online. I'm on YouTube all over the place. And I'm looking forward to hear a bit about you. So if you could, 1 minute to introduce yourself and then I go to the topics. Probably ladies first.
Sure, my name is Aniko Szigetvari. I know my last name is hard to pronounce. I'm a founding,
sorry for that.
No problem. I'm a founding partner of Atlantica Ventures, which is an African impact venture capital fund. We invest in a number of verticals, including fintech, agri-tech, logistics, digital security, IoT, and B2B e-commerce across a number of countries in the continent, from seed to Series B stage, so very early stage. And prior to Atlantica, I was the global head of the technology, media, telecoms group at IFC.
Very nice to meet you. And where are you coming from? I think it's interesting to see where you're based.
I am Hungarian.
Okay, very good.
And yes, I'm based in the US at the moment.
In the US, very good. So I don't know, RAZIF or William?
Okay, I'll go
William,
first.
probably.
Sure. Well, CreditEase Innovation Financial Innovation Fund is a fund that's exclusively in the fintechs around the world, fintech companies around the world. So for CreditEase, we started in 2006 as a P2P lender. So we are now one of the largest P2P lenders in China. So in 2015, we kind of leveraged the fintech DNA and start the fintech fund of our own, and then before that we also have a wealth management business. So we kind of combine the fintechs and the wealth management together to form this fund. So for this fund, we invest exclusively in fintech opportunities around the world. So we have people in US, London, and Singapore and China, and also in Hong Kong, where I'm based. So myself, my background is I was an investment banker and a private equity investor before. So I joined CreditEase 3 years ago.
Very good. So last but not least, RAZIF, are you on the call? I think, no, I don't think so. So let's kick off. I think if he comes, he can actually join us. I'm sure probably from the previous speakers, we can all speak some of the things. So I think starting by the present situation. So both of you are investors and you are investing, one of you in Africa, other as well in fintech, which are complementary things and technology. So one of the things as a preamble, I think this is a great challenge, of course, for business worldwide. I'm sure all of you have been going through both healthcare challenges, business challenges, financial challenges, and the investment challenges as well. So I would like to start straight away with that and kick off with that question. So How do you deal right now in your present day-to-day operations with the uncertainty that comes with COVID-19 and all the pandemic situation around the world? I think that's a very important question that I think everyone is looking and understanding how different people are looking at different solutions. And I think the investment is critical right now. So from an investment and fundraising perspective, how do you dealing and what did you change so far when you look at companies, when you look at even your operations and as well the investment trends that you see around that? Well, I would start as well with Aniko, probably.
Okay.
Yeah,
Yeah,
we have
sure.
only three
No
people,
problem.
so.
Yeah, no problem. So from our point of view, the sectors that we have chosen to invest in have a non-discretionary spend aspect to it. Part of the reason why we chose to invest in them, kind of essential basic needs. So while I think the economies are getting impacted, some of our sectors are probably impacted slightly less than more of the discretionary spend sectors. Now, what's happening in Africa, the same as anywhere else, I think things are moving more online. So in one sense, opportunities are arising around that, whatever is fueling that online people and businesses going online, whether it's kind of e-commerce, the logistics attached to it, some of the fintech solutions enabling it. But in terms of our investments, I think due diligence gets much deeper earlier than before, with the view to see if the businesses we're looking to invest in are able to sustain themselves or grow in the current environment, and see if they would be likely to raise funding in the next 18 to 24 months. In Africa, usually, and most of emerging markets, fundraising isn't always the easiest, and COVID definitely throws a rock at it. So a very keen eye to making sure that the companies we invest in will have the capabilities to survive through an elongated time period and be able to fundraise, a couple of year and a half to 2 years down the road.
Yeah, that's interesting. And for instance, during this process right now, are you continuing to funding, or you stop a bit during the last 2-3 months?
Yeah, we're definitely looking to fund. And as I mentioned, the shift in that is that the valuations seem to be coming down, the round sizes seem to be coming down, as money is definitely drying up in the continent, in the VC space. And we can talk about it as to why that's also happening, fueled by COVID. As a result, while entrepreneurs have always been very open to sharing information about their companies, now that process is accelerating and we are digging deeper into companies much earlier on than before.
And William, from your side, what are your suggestions on this, and what has been your experience?
Well, I think what's happening right now is no different from the previous 2 cycles. You look at the financial crisis in 2008, or even in the Asia financial crisis 20 years ago. So what we advise our portfolio companies is, okay, the storm is coming, so be prepared. So we ask them to prepare at least 18 months of cash flow runway, because even they want to do another round anytime soon, it's going to take longer time. So a lot of our portfolio companies, they're taking a more conservative approach to cutting down their costs as to make the 18 months runway, or they will go and find another source of funding soon. But but from the investor's perspective, just like the previous two cycles, and a misalignment of the valuation between the investor who's willing to invest versus entrepreneurs who's willing to accept the valuation. So from there, we can see at least 6 to 9 months of say the price discovery process, whether the investor sees that okay, the company is not as affected by COVID, and they're willing to pay the price, a higher price, or the entrepreneur starts seeing the reality that okay, they are really impacted, and start to accept the reality that okay, they need to lower their expectation of valuation.
So I think that this is interesting how different, and I know that you are in Hong Kong. So from an Hong Kong perspective in China, you are already getting out of the cycle, or at least of more emergency in terms of COVID and all the effects. Are you seeing, so what I've been seeing, at least from, I'm based in London, I'm seeing there's a massive change in terms of, especially in terms of the digital process of transformation, and as well how this is accelerating a lot of governments and initiatives that, for instance, until now, people were much slower on that. Are you seeing that changing a bit on your work, especially in fintech? Because, for instance, fintech is an area that has been, there's a cutting edge version of part of companies that are really going very fast, but there's already a lot of other companies or organizations that are going very slow. Have you seen this cycle accelerating right now with COVID-19? Are you seeing some changes or not still any changes on that?
Yeah, absolutely. The COVID-19 really speed up the process of people changing their habits in terms of getting online. As we all experience the lockdown in our own country, we see that business activity in general has slowed down quite significantly, but there are some other part of it that has actually grown. That, so for instance, like for credit, we have a wealth management business, and we were already equipped with technology before the COVID. So because people are staying at home longer, so they start to think about how they will manage their own money. So we see the engagement rate or the more people getting engaged to our technology platform in terms of what they are paying more attention on their investments themselves. So that's a good sign. And then for the other opportunities that will arise, which we see from the other regions, is that basically two areas. One is the office automation, like how they automate your day-to-day business process. That part has some of our portfolio companies have got a lot of phone calls lately on that. So the demand for that is really growing. And the other part is the customer service, because now the banks and the financial institutions are getting a lot more traffic on the customer service to the level that they cannot handle. So they are looking for the alternative strategies, whether it's a chatbot or some other technologies that will help them to cope with this volume and also to manage the cost.
Yeah, that's a big opportunity. And Aniko, I'm particularly interested with, so being a US venture capital and as well investing in Africa, and as well with all the geopolitical concerns, and as well with all the the concerns with COVID-19. So how is your approach towards Africa right now? What countries are you targeting? For instance, you mentioned some of the verticals that you are investing, but could you give us a bit more of insights into the way you're looking right now, and as well, how do you see Africa? As the previous panel mentioned, is a fast-growing continent that probably will be the 21st century increasing more and more important.
Sure. So just to clarify, we're an African fund with our headquarters in Nigeria. I just happen to be in DC.
Okay.
Yeah.
Important.
Yes, important. And I've been investing in Africa since 2004, so 16 years. The sectors we're investing in, fintech, agri-tech, logistics, digital security. Sorry, what was the question? How do I see?
So how do you see Africa in terms of the verticals that you just mentioned? And as
yes,
well, do you
yes,
see
yes.
the COVID-19, but as well, the general trends in terms of what you've been doing?
Yeah, so COVID-19, I was just talking to actually an economist yesterday from the chief economist of the UNDP on what's expected in Africa. And he said, look, COVID happened and the pandemic happened, but the supply and demand impact of it hit Africa before actually the pandemic hit. And so Africa experiencing it differently than some other markets and countries may have experienced it. So in his mind, the question was whether the recession will be a V-shaped or U-shaped, and I think depending on who you listen to, it's different stories. I think what you see in Africa on top of COVID is though that oil prices have also collapsed. So some of the economies will be get impacted by that as well. So if you look at, for example, Nigeria, that's very oil dependent, I think it's going to get hit much harder economically by oil price declines than potentially by COVID. Some governments are actually starting to be quite creative. So I think the Kenyan government just approved $250 billion shillings of support to citizens that's going to be distributed to M-Pesa. So governments are responding to this. Now, in terms of opportunities, you know, when we started the fund and talked about digital security, people looked at us like we were somewhat nuts. Why would you want to do that as a theme, investment theme in your fund? And now it's not really a question as things are significantly moved online, and even in countries where digital payments weren't so highly adopted, the adoption rates are really speeding up. So I see one potential area, I think that's really going to benefit some of the logistics businesses, especially that have the last mile component to it on the B2B side. I'm not talking about B2C or C2C. I think is doing well, looking at our portfolio, and expected to do well. And on the fintech side, depending on which sub vertical within fintech, some are doing well. I think it's an opportunity for any business to innovate and do more and do things that they might have planned to do a couple of years down the road, that brings the opportunity to do it now earlier, or pivot if you have to. So on the fintech side, you see, for example, payment processing companies moving into kind of B2B marketplaces, logistics companies getting more into the marketplace businesses. So you're starting to see, I think, some expansion and pivoting of businesses based on, I mean, COVID's negative also brings opportunities.
Oh, very interesting. And for instance, one of the questions I'm particularly interested. So being based in Africa in terms of the fund, and as well Nigeria, which is one of the fast growing economies in the world, are you seeing in terms of dynamics of countries, is still like Africa, Kenya, or Ghana, or are you seeing across all Africa, or for instance, which economies are you targeting more in terms of the African countries?
Yeah, we're focused on 6 countries. Those are Nigeria, Kenya, South Africa, Ghana, Cote d'Ivoire, and Tanzania. Those are the 6 countries. And they, even pre-COVID, had different growth trajectories. The 2 largest ones, South Africa and Nigeria, were actually the slowest growing, but big economies and lots of opportunities in the startup ecosystem, especially in Nigeria. And then some of the others were actually very high growth countries, 6 to 8% per annum. So they weren't only high growth within Africa, but one of the highest growth economies globally. So even if you look at IMF projections now, some of those countries, even this year through COVID, are expected to continue to grow, although albeit at a very low growth rate. So, I mean, I think depending on what your view is of the world, if it's V-shaped and you look at the IMF projections next year, growth will resume in all those countries. If it's more U-shaped, that's gonna take a little bit. I think it's a different setup than any of the crises that Africa experienced before, especially the double whammy in some markets of COVID and oil price collapse. So we'll see. But Africa in recovery tends to be pretty resilient compared to some of the other emerging markets I worked in, where the recovery path would be much longer. So I'm optimistic.
Oh, very good to hear that, and it's good as well, this experience, because I think we have too much contradictory information coming from Africa and from emerging markets. So William, in your case, which countries are you targeting? And of course you're based in Hong Kong, and Hong Kong is, of course, yes, China that is launching right now the BCN initiative that is launching blockchain investment initiative across the world. So can you tell us a bit about that? And as well, I would like to look at being based in Hong Kong, how you seeing this angle between the Western world and China as well?
Well, I think for if you look at the fintech, so US and China are the biggest tech players of the market in the world. So, so in certain area, the US is still more advanced than China. So our investment strategy really sometimes for some technology, tech, or even the lending, or even payments, and the technologies that appears in the US will get replicated into China in 2 or 3 years. So that's the story that we are playing, and want to bring those technologies from the more advanced economies to the other less developed market. So besides the US and China, we're putting more focus into Southeast Asia, because if you look at the demographics of the Southeast Asia, it has a 600 million population, and it's a mix of economies of different stages. Like we have a very developed market in Singapore, and then we have Indonesia and Philippines that's now becoming the middle class, and then we have the Vietnam that's become the emerging market. So there's a lot of activities going on in, especially for the fintechs in that area. So we are that's where we are putting more focus.
And from this focus in terms of investment trends, so I know that China is massive right now, rolling out the blockchain initiative for the cities and a lot of the things that touch fintech and payments. So from your investment, and as well from the trends that you're seeing right now in terms of Asia, where you just mentioned a lot of emerging markets that are really growing very, very accelerated, which is the main areas that you see right now innovation coming, and as well opportunities from a business perspective and financial perspective?
Right now for China, for blockchain industry, it will be very different from the rest of the world, because for the rest of the world, the blockchain is really about the connectivity throughout the world. But for China, they will likely, at least from the beginning, it's going to be limited to a local play. So for instance, for payment tech, they're using the blockchain to track the payment, or where and how you spend your money. But these things will be very limited. Will be limited to the data you can get within China for many like data privacy or other regulations that is limiting the technologies to be data invasive. So with that, I think China, it's still a long way to go, but their strategy will start from local first. But the economy, the Chinese economy, is big enough to support being the local blockchain players. But eventually, after they, well, I guess they figure out or establish the platforms, then they start to export to the other market, just like 5G.
Very interesting. And from your side, and we are finishing right now the last minutes. So Aniko, in terms of your experience in terms, for instance, 5G and a lot of these technologies like IoT, which you mentioned a bit, and big data and artificial intelligence, for instance, in terms of Africa, I know that we mentioned M-Pesa, and you mentioned M-Pesa as well in terms of Kenya, but what kind of innovation are you seeing right now in Africa and within the scope of what you've been working that is really coming up in terms of emerging trends, in terms of investment, and as well in terms of the work you're doing and the work, where you see more opportunities?
So 5G, that's a little bit far away in Africa. You have 4G penetration is less than 10% across the continent, varies a little bit by country. So it's relatively early days of network deployment, but it does, even 4G is making a huge difference in terms of startups' ability to innovate and offer services. You just have much better user experience, as it's Africa is a mobile first continent. So as you use your smartphones and sometimes even feature phones, you have much better user experience in you know, getting to the internet, and therefore startups have the chance to innovate more. I would say, honestly, there's so much inefficiency and so many gaps, inefficiencies of sectors and so many gaps, that innovation is coming from any and every sector that you touch. So I don't know if I can point to one. It really started a lot on the fintech side, but now you see opportunities and great ideas coming from across the board. Now there's a really vibrant startup ecosystem, 8,000 plus startups just in sub-Saharan Africa, attacking all of these inefficiencies and you know, commercializing or making profitable opportunities out of it. On blockchain and crypto, I think it's relatively early stages, but I think it has the premise of fueling Africa, have the same impact on Africa as the mobile networks have had. Back in the kind of 15 or so years ago in Africa, most people had no phones. Mobile phone penetration was 1 to 2%, and now it's over 80%. It really transformed the continent, and I think blockchain has the chance, and some of the cryptocurrencies, if it's done well and thoughtfully and supported by legislation and regulation, hopefully over time, has the chance, I think, of leapfrogging Africa once again.
Oh, that's very interesting. And I think for wrap up, I think we are in the last seconds. I think probably just one remark that I'd like, probably if you could keep it in 1 minute, I think that's probably the time we have. What would be like the starting with you, Aniko, in terms of what would be your suggestions for people that are listening to us in terms of opportunities in your case for Africa, and the things that you suggest for the people that are listening to us, and as well in engaging with you and your work?
In terms of investment opportunities?
Yes, yeah.
Okay, I would say, well, we started the fund because we thought there was we think there's a gap in the seed, very early stage pre-seed, seed, and Series A investing. And I think that's where you see a lot of good entrepreneurs innovating and sometimes fall short of scaling their businesses because of the lack of funding. Although Africa has received a lot of VC funding, it's still very little compared to the opportunities that are out there to fund and compared to other emerging markets. So I would encourage people to look at the early stage space. Very happy to talk to people who are interested. We're, as I mentioned, busy looking at opportunities and continue to invest.
Thank you so much. William, to wrap up and finalize, if we have one minute more even.
Yeah.
Okay, well, okay,
Please,
I can
yes.
only speak for the fintech. So, so I believe the insurtech will the one that should put more attention to. If you look at the other fintech silos like payment and lending, it's already very developed. So insurance is always like 2 or 3 years behind the other verticals. So if you look at the first quarter's investment number, so for the total amount of investment in tech startups or in insurtech startups, it's $1.5 billion. High, even higher than the fourth quarter of the last year, versus the other the investment into the other verticals, which is less because of the COVID. So the investment in insurtech is brilliant. I think this trend will continue in 2 or 3 years as the insurance companies start to catch up with that technology, and also the lack of investment in the past 2 years, then that will present a much higher returns on the investment than the other verticals